Hi there, I'm Mark Anderson. I'm a mortgage banker with Paramount Bank. Paramount Bank is licensed to lend in all 50 states. So what that means is no matter where you are in the country, I can help with your mortgage. And I would love the opportunity. Give me a call or shoot me a text at the number below to get started with that conversation. And I think that you'll be very happy with the terms that I can offer. What I'm here to talk about today is one of the most frustrating problems that you might run into during your process of buying a home. Now, out of all of the hoops that you need to jump through, pre-approval, landing a contract in this crazy seller's market where, some of my clients are telling me they're 10, 12 offers in before they actually land one. Then you've got inspections. You've got to make sure that the walls aren't made of balsa and that the foundation isn't going to crumble under your feet. So you go through all of those hoops and you're in the loan process and things are chugging along. And then you get the call or the email that your appraisal has come in low. So what we're going to talk about in this video is what to do if you find yourself in this position, you're under contract for a home, that appraisal comes in low. Is the deal dead? Do you have to go back out there and try to land another one? Or are there options? Are there things that you can do to move forward while protecting your own interests to keep that deal alive? But before I jump into those strategies, I need to take a step back in time to the 18th century. In Benjamin Franklin's 1735 letter to the Pennsylvania Gazette, which is his own newspaper, he wrote a letter, and that letter was called Protection of Towns by Fire. Protection of Towns from Fires. Protection of Towns from fire. And it was in this letter that he coined a phrase that so many of us use: an ounce of prevention is worth a pound of cure. Now, the whole reason I bring up this kind of historic example involving Benjamin Franklin to get to that expression is that that expression is super relevant to the appraisal problems that I have seen throughout my career. In my experience, and this is going to be a statistic that is completely made up, but I think it's pretty close. In my experience, about 90% of the low appraisals that I see, when I take a deep dive and I look at that appraiser report, it shouldn't have been a surprise at all that the appraisal came in low. And it should have been a possibility that was planned for. The best practice, if you are purchasing a property, is you've got to have your realtor do some legwork for you on the front end before you sign your name to that contract offer. In fairness, I do not expect any real estate agent to know the appraisal process inside and out. The art and science that is involved with generating an official appraiser report is something that requires a lot of very specialized knowledge and experience in that area specifically. However, at a higher level, one thing that I think a good realtor should do on every single offer that they make, they should pull up a list of likely properties that are going to show up on the appraiser report when that takes place. What you're looking for are properties that are basically comparable in terms of the bed-bath count, in terms of the overall square footage, in terms of the general quality of construction, the quality of the finishes, etc. The realtor needs to narrow that list down to properties within 1 mile of the subject property that have sold and closed, not listings, that have sold and closed within the last 12 months. Once you apply those general filters, you are going to have a list of properties. And it is almost a guarantee that some of the properties on that list are going to be the comparable sales used on the appraiser report. With regard to the offer that you make the seller, once you have this list of likely comparable sales in front of you, you want to take a look at what you're offering versus the range of prices on that list. If what you're offering is kind of dead in the middle of that data set, I think your risk of a low appraisal is pretty low. However, as your price compared to that data set gets higher and higher and higher, if you're in the top 25%, top 10%, top 5%, maybe you're offering over what any of those properties have sold for, you are going to be steadily increasing the risk that your appraisal report will come in low. And this is risk that can be accounted for and planned for. All right, on to these strategies. How do you deal with this situation? You're under contract, your appraisal has come in low. What do you do? Before anything else, it is very important at this stage to identify what contract protections you have. What I'm really hoping for in your case is that you did not waive your appraisal contingency. Generally speaking, what this contingency is going to give you are options that you don't have if the contingency has been waived. Those options are going to include an opt-out. The appraisal came in low, you reserve the right to extract yourself from the contract, retain your earnest money, and move on down the road to the next deal. It also gives you the option of renegotiating the price with the seller. Now, the opportunity to renegotiate does not mean the seller is going to renegotiate, but a good realtor is going to rise to the challenge to represent, to advocate for the buyer's interests in getting the best possible outcome in the transaction. In fact is, this whole notion that in this market, in this seller's market, that the buyer has no leverage, this is just wrong. Number one, by the time that appraisal report comes in, a lot of progress has been made. Contract was accepted. The inspections, those are typically done. Any renegotiations based on the result of those inspections, that's out of the way. Time has been put into this transaction. And to a seller, time is money. Number two, you have an official appraisal report by a licensed appraisal expert. And in that expert opinion, backed up with data, you've got an official notice that should you proceed with this transaction, you are overpaying versus what the market data supports. And the fact that your appraisal came in low, it also stands to reason that if buyer number two lines up to take over this deal, you get kicked to the curb. Buyer number two, if they're bringing a loan to the table, and if the appraisal that was done was a strong appraisal report, the seller could quite likely find themselves in a very similar situation. And they're going to find themselves in that very similar situation after more time has gone on. Basically, what your realtor needs to do is to send that appraisal report over to the other side. They need to explain the strength of that appraisal report. And they really need to ask the other side, look, if you don't think this is a good appraisal report, which, by the way, I'm sure they're saying all sorts of nasty things about this appraiser, it's the dumbest person they've ever encountered, has no idea what he's doing. I've heard that all before way too many times. Ad hominems aside, what your realtor needs to do is basically ask the other side, like, okay, here's the appraisal report. You can see how the numbers were calculated. You can see the comparable sale data that was used to derive the valuation. What data is missing? What comparable sales should be on this report? What data supports a higher opinion of value? And what I find in a lot of these cases is that the other side, well, they don't have the data. If all they really have at the end of the day is that they had a property listed in a hot market where there's excess demand on the buy side versus the amount of inventory for sale, if that's their whole argument, that it's a hot market, well, that fact is not going to alter the result of the next appraisal that will be done on the property. Long story short here, I want your realtor to at least try to renegotiate this purchase price. All right, you've tried the renegotiation. The seller has resisted the well-founded, well-documented argument that they should reduce their purchase price, that they're likely to face the risk of a low appraisal should they sell to someone else. If you can't get the seller to budge, the next thing that you have to look at is a formal reconsideration of value request. Now, post-2008 financial crisis, there are a ton of rules in place to prevent somebody like me, the lender, calling the appraiser and yelling at them because they appraised this low and they're never going to get another order from me unless they bump up that value. There are tons of rules to prevent that from happening. But the rules do allow for us to request the appraiser reconsider the value as long as our request is based on cold, hard data. And a good reconsideration request is going to attack the appraisal on two criteria. Number one, false, inaccurate factual statements on the appraisal report itself. If the property is truly a 4-bed, 2-bath, but the appraiser says it's only 3 beds, 1.5 bath, that would be an example where on that factual basis alone, a reconsideration request could take place. And candidly, there are some human error type explanations for why the appraiser may have made that mistake. And if they're given data to show them clearly in black and white that that is a mistake, the appraiser is very likely to correct the report and potentially assign a higher value on that basis. The second tactic here is to submit additional sold properties for the appraiser to consider. Now, this is getting back to what I recommended earlier as far as the ounce of prevention is worth a pound of cure thing. The realtor you're working with should have at hand a list of comparable properties that have sold. Out of that list, if you've got some good, really what you're hoping for here is not just one, but multiple additional comparable sales, that can build a strong foundation on the reconsideration request. But bottom line, that reconsideration request has to be based on good data. And the appraiser is going to get that reconsideration request. They're going to take some amount of time to respond to that request. And ultimately, the strength of your case is going to correlate pretty well with the likelihood of getting the result that you want. All right, so you tried to renegotiate. That didn't work. You did a reconsideration request, or maybe you didn't because there really wasn't good data to support one. But either way, those have failed. I've got really just 2 paths left. One, and this is one that it's a little awkward. I think it would involve some delicate conversations, but you got to keep in mind the lender that you're working with, they are extremely unlikely to say, take the appraisal report they've got, wad it up, throw it in the trash can, and order you a new one. Given that that in all likelihood is not going to happen, one thing that you could consider, assuming that you can work it out in the time frame allowed in your contract, maybe you'll have to push for an extension with the seller, but there is nothing stopping you, the consumer, from withdrawing your application with the lender that you started with, starting a new application with a new lender that's going to order a new appraisal. I really only recommend even entertaining this option if you have reason to believe, based on the data, that the appraisal report you've got is just a lemon. If there's good comparable sale data that supports the price you were trying for with the seller and the reconsideration doesn't work out and you've got everybody in your ear saying, yeah, this really is just a bad appraisal report, then it's at least something to consider. Just start over, get a new appraisal. Hopefully that comes in better. 2, on the last remaining paths for dealing with a low appraisal is biting the bullet on the math. To illustrate the concepts here, let's say hypothetically, you have secured a sales contract for $400,000. The appraisal, well, it came in at $360,000. And the only way to plug that gap, and this is the first number we've got to put into this equation of determining how to handle the math of a low appraisal, that gap, you've got to cover it with cash. Before even going into your down payment, we know that the lender is going to consider the value of this property to match the appraisal report at $360,000. Whatever you have agreed to, therefore, with the seller, you're moving forward at $400,000. The lender basically says, we don't even start the conversation on the loan until you plug that gap with cash out of pocket at closing to the seller. From there, we need to go into the down payment. Whatever down payment percentage you were planning on, your down payment percentage is now going to apply against the $360,000. If you were planning on a 5% down payment, well, on $400,000, that would have been $20,000 total down payment. Now, you've got the $40,000 gap plus 5% of $360,000, which comes out to an additional $18,000. If you're planning on 10% down, well, that would have been $40,000. Now, that's just the cost to plug the gap. 10% on $360,000 is another $36,000. Finally, let's say you were planning on doing 20% down. Well, that would have been $80,000 out of pocket for the down payment. Now, you've got the $40,000 to cover the gap plus $72,000, which is 20% down on $360,000. One thing that you might see here looking at these numbers is that if you were already planning on a larger down payment, let's just say you were planning on doing the 20% down. One of the things you're going to see here is, well, if you were already planning on an $80,000 down payment on this deal, and your appraisal has fallen to $360,000, well, out of that 80, you got 40 to cover the gap, and then you've got 40,000 additional to put down. Instead of coming up with more money out of pocket, in this situation, what you can do is simply opt for a lower overall down payment percentage. Assuming that you didn't need to make a 20% down payment to qualify, you could simply proceed with a loan of less than 20% down. If you've got the 40 on the gap and an additional 40, that's a little bit over 10% down. The biggest trade-off here is that with 20% down, I'm guessing one of your motivating factors there was to not have to pay private mortgage insurance. In this case, again, if you're kind of weighing your options out, maybe it's worth it to just take a loan that has some PMI to avoid having to spring in for that much more money out of pocket. All right, one last thought on this subject. You know, it never makes anybody's day when they get the news that the appraisal is coming low. It certainly doesn't make my day. I really want you to take some time to consider, is it truly worth it to proceed with this deal, given that you've got a piece of data that says you at least might be overpaying? Fact is, there are other properties out there for sale. I know it has been an extremely difficult time landing a deal. Many people have put in tons and tons of offers before landing on one that's accepted. But at the end of the day, the whole purpose of the appraisal, from your point of view as the buyer, is to protect you against paying too much for a piece of real estate, especially if your intention is only to live in this home for 5 to 7 years. The possibility that you could get yourself in a situation where you're buying at kind of the peak of the market maybe, and you're also overpaying versus the other comparable sale data, the risk that's inherent to that, I think, cannot be ignored. In these kinds of situations, you've probably got a lot of different voices in your ear, and whether you're working with me or not, this process and all of the people that you have working with you, they are supposed to be working for you. Only you are going to face the financial reality of what it means to proceed on a real estate transaction, where you might, at least on paper, according to the appraisal, where you might be overpaying. Taking that on, agreeing to overpay versus the appraised value, is something that should not be taken lightly. And I strongly recommend that you take some time to consider your options, weigh the risk, and of course, to the extent of your ability, go through these various steps to try to mitigate the situation. It's not worth pushing through it if it doesn't make sense for you at the end of the day. All right, thank you so much for watching this video. I hope that you found this content helpful. If you could, please just throw me a little like. It's just a light tap of that like button. Subscribe to my channel for a lot of future content and other updates. Also, if you have questions, whether it's about low appraisals or anything else mortgage related, hit me up in the comments below. More than happy to share my opinion, talk with you in some detail. Give me a call, shoot me a text at the number below anytime. I will talk to you again soon.